Does this describe your Forex trading? Don't worry, we've got the solution for you. Do you feel weighed under by the burden you're carrying? Don't worry, we've got the solution for that too. Hi, it's Gary Pavkovich here. Today we're going to discuss Forex system trading and decide what makes a good Forex trading system. First and foremost to take into account should be trading suitability. The Forex system you choose should suit your lifestyle unless you wish to change your life to suit the system. Now, not everybody is willing or able to do this, and you should make sure that your system you choose is the one that's going to suit you best. Secondly, a profitable win-loss ratio is pretty important. The system you use to trade should win more trades than it loses. This probably stands to reason. Unless, of course, the winning trades are on average larger than the losing trades, then perhaps you can consider a system that has a negative win-loss ratio, i.e. it loses more trades than it wins. This, though, is rare, and for the purpose of this exercise, we will discount the second option. Entries, exits, and stops should be indicated. You want to know exactly where to enter, where to place your stop, and where to exit the trade. Unless it's a mechanical system that uses some sort of calculation, you should see on your charts where the entry is, where to put your stop and to move your trailing stop as the trade progresses, and where to get out the trade. Hopefully you've made a profit, sometimes you'll make a loss. The last thing we want to take into account is a proven track record. The system you trade should have a reliable track record over a period of time. The longer the better, covering all possible market conditions. You want to see trades going back at least 6 months to know that a system is profitable and reliable. Preferably years though, the longer the better, under all kinds of market conditions. When the markets are trending, which they only do 25 to 30% of the time, or when the markets are ranging, which they do most of the time, 60 to 70% of the time. So basically, you want to see how the system works over the longest possible period of time under all different kinds of market conditions. Maybe your charts look like this. This is what we call trading naked. This is what some people think of when we mention the words trading naked, but for the purposes of this video, it's not really what we mean. So your charts probably aren't naked. Maybe they look something like this. You've got a bunch of histograms under the chart, got a bunch of indicators on the chart. It looks a little cluttered. Some might say it looks messy. Hopefully you know what's going on there and you can make sense of it. I couldn't, and I've been doing this for a long time. This is what my charts look like. Nice and clean. Very, very simple. When everything's blue, I buy. When everything's red, I sell. I'll give you a slightly more detailed analysis in the next clip. So the first trade indicated by the blue arrow in the top left hand side of the chart. It was a losing trade. No, not a bad one. A relatively average loss, minus 29 pips. The next trade is a short trade indicated by the red down arrow. Really nice short winning trade, 169 pips. So now we're up an average of 140 pips over those two trades. One small loss, one relatively large win. Third trade, another long indicated by the blue arrow, took place over 2 days. It came out plus 62 pips. So now we're up just over 200 pips. The next red arrow wasn't a trade because the two histograms below the chart you'll see are actually blue, and to indicate a valid trade they would have needed to be red. So no trade there. The last blue arrow on the top right hand side of the chart was a losing long trade, a minus 59 pips. So on this chart, on this page, we netted just over 140 pips. You'll notice that not every trade is a winning trade. Any system that claims that they have a 100% winning record and every trade is a winner, I can tell you now they're outright liars and you should avoid them at all costs. Here's the proof. This is our live spread betting account, Cantor Index out of London. We spread bet because it's tax free. That's a story for another day. With spread betting, because there's rollover at 8 in the evening, Greenwich Mean Time, trades are quite often broken up into two trades. So the first buy we refer to on the left-hand side of the chart, top left, is the two trades on the 24th. The first sell, the two trades on the 25th. The second buy, the two trades on the 26th. And that last losing buy there is the single trade on the 27th. So you can see we've got 4 losing trades there in red, 3 winning trades there in black. In actual fact, the system has a fairly good win-loss ratio, but in this example, we have 4 losers and 3 winners, but for a net result of over 140 pips to the good. So that's a short summary of what you can expect from a winning Forex trading system such as this one.